So, hello America, welcome to Bowling Green, Kentucky, Western Kentucky University, and this is Accounting 110, Accounting for Decision Makers, and we are celebrating the fact that our first test is now over, right? As I said, I will let you see those at the end of class. I control them so that way we got to go past that. We're all moving on, man. Moving on. What page should we be on? Should be kind of managerial terms, kind of flipping pages. Yeah, look at this. Like we're learning stuff. You know what I mean? We're learning stuff. Keep going. Keep going. Keep going. What's this? Maybe. Keep going, actually. Keep going. Look at all this. Look at this. Isn't this cool? Isn't this cool? I think this is where we want to be. Here we are, page 89. Thank you, sir. Page 89, everybody. Did we talk about this? What's accounting used for? What is accounting used for? Oh man, that was a long time ago. You getting hot text?
Yes, sir.
It is used for decision making. So number one, what's accounting used for? It's used for decision making. Then what is an accountant? Here we are. Corey, or actually Danny. Where's Danny? Danny, what's accounting? What is an accountant? It is not usually the decision maker. You are the decision maker. You're not an accountant, right? So what is an accountant? I probably gave you a one-word answer. The informer, right? The informer, person providing the information that is used to do what? Corey, what's number 3 down there? Decision making. What's accounting used for? Decision making. So what is accounting? It is information. What is accounting? What is an accountant? It's an informer. Page 98. Page 98. Or is it 89? I'm sorry, I'm dyslexic. Page 89. Page 89. And so, accountant. What is accounting? It's information. What is an accountant? An informer. What's accounting used for? It is used for decision making. Okay. And so, the important thing to remember. This is. Sometimes I would draw a bunch of stuff on the board. I'm going to spare you all that. How management accounting is different than financial accounting, tax, or audit. Now, first of all, let me explain that what we learned for the first test would stereotypically be described as financial accounting, right? Because it's kind of all the stuff you need to know to read those published financial statements of, what do we talk about? Apple or Tesla or whatever business that you are checking out on the internet. Those are words and concepts that you need in order to understand those financial statements. However, we still can't forget about those because we're still going to be using a lot of those terms. But we're moving on to what I would describe as managerial accounting. And well, I guess I will draw this on the board. So you should see how management accounting is different than financial accounting, tax, or audit. And see, the thing is accounting information is used to make decisions. Right? Accounting information is used to make a decision. And then what happens when you make a decision? That's perfect. There are consequences to your decision. Stuff happens. right? I tell the story that at one point in time, I made a decision to purchase 1,000 CDs with my name on the front, my picture on the inside, and my music on the CD. Okay? Still got over 900 of them left. But at one point in time, I bought 1,000 of them. And that's a decision I made. There were two things that happened when I made that decision, right? First thing that happened is I was immediately poorer, right? I had to pay for them. And the second thing that happened was I received 5 deceptively heavy boxes that appeared. They're not that big either. Not that big. Each, imagine, I think it's 25 in a little box and 4, deceptively heavy boxes that appeared. And that can be measured, right? We can measure how much money I spent. We can measure how many CDs I received. We can calculate a cost per CD. We can measure all this stuff using accounting information. And so economic events occurred. I was poorer. I received boxes. And we can measure that with accounting information. And really how I usually label this is management accounting information. And then the cycle continues, right? Because I made a decision, economic events occurred, we can measure that information using accounting information, and now I've got additional information, right? How much do I need to sell these CDs for in order to make money? That's a new decision I got to make, right? And so the cool thing, so here's financial accounting, and those other types that you don't need to really know too much about, but here is management accounting information. And so the reason that management accounting information is such a big part of this class is because it is the information that you will be using as the decision makers in organizations to make decisions. And so understanding some of these concepts, and actually it's in the second part of the class where I'll be teaching you, we'll be doing a little bit more math associated with all this stuff, okay? So there's that. So that should be the notes on how management accounting is different than financial accounting, tax, or audit. Management accounting information is the only one that's pre-decision. All the rest are post-decision, okay? And then let's move on. Let's talk about variable costs and fixed costs, okay? Let me erase and write some new cool stuff on the board. Can this be seen on the board? Fairly good, okay? Just checking. I mean, unfortunately, this doesn't work quite as good as having a camera in the back of the room following me around, but hopefully it's not too unpleasant to watch, right? Not too unpleasant to watch. So let's talk about what you should see a page about variable costs and fixed costs, right? Variable costs and fixed costs. So variable costs vary with the number of units produced. I see you. Distracted. Are you distracted?
Yeah.
Just a little bit? Was it a good text, hot text?
I was texting my dad.
Well, probably not. Not too hot. But anyway, What did you write down? I've given you a definition.
What? Really?
Anybody write down a definition? Thank you. What did I tell you?
Vary with the number of units.
Variable costs vary with the number of units produced. So like 3 people out of 30 wrote down the first definition that I gave you. I've noticed that before. I mean, you got the notes, so I'm kind of preaching to the choir here. But, you know, do you think I should have to say it 3 times before people start writing? What do you think? What do you got written down?
Varies with the number of units.
Yeah, so it is a cost that varies with the number of units produced. So let's talk about an example. I am wearing a Columbia shirt, a Columbia fishing shirt is what I am wearing. And I like Columbia stuff because it has really long arms. This is actually a tall. And so that way I can reach out and my sleeves don't pull up, you know, to my forearms. And so I just really like them. Plus I'm getting used to kind of the silkiness of non-natural, of more nylon associated fabrics. So, but let's assume, just for purposes of discussion, that there is $4 worth of cloth in this shirt, okay? There's $4 worth of cloth in this shirt. That is a variable cost, okay? There's $4 of cloth in the shirt. So how much would we spend to make, how much would Columbia make or spend on one shirt? Hermes?
$100.
For one shirt?
Yeah.
How much for cloth? How much did I just say? I just said.
$10.
No, how much are we spending on cloth? Were you paying? You were paying attention. What? It's like I was good last time, Dr. Fessler. Why are you expecting me to be good 2 times in a row? Well, you know, didn't I say how much we were spending on cloth? How much? $4. Hermes. Focus, man. Focus. Do I need to talk louder? I mean, that's what students tell me, I think, is I need to talk louder so that they can hear me. You know, like in the back of the row, I bet they were struggling a little bit, and so I need to talk louder. So if we are spending $4, if Columbia is spending $4 to make on every shirt they make, Hermes, if they make one shirt, how much are they spending on cloth? $4. $4. Okay. Cam, if they make 2 shirts, how much are they spending on cloth? $8. Beautiful, beautiful. Say, if they make 5 shirts, how much are they spending on cloth? $20. How about 10 shirts? Hayden, is Hayden here? Hayden is here. Where's Hayden? Hayden, if they make 10 shirts, how much are they going to spend on cloth? Huh? $40. Olivia. Where's Olivia? Olivia, this is the awesome question. This is the good one. If they make 0 shirts, how much are they going to spend on cloth?
Well, won't they still buy the cloth?
Not if they don't make any.
0?
Then 0. And that is a defining characteristic of a variable cost. Okay? That's the defining characteristic of a variable cost. Is that if no shirts are made, no cost is incurred, right? 0, 0, okay? Piece of cake, walk in the park, easy's falling off a log. So let's talk about fixed costs then. Fixed costs remain the same regardless of the number of units produced. You writing that down? Y'all did much better this time. Thank you. I only said it once. What do you got written down for me, man? Are they lying to you, or do they just?
I just haven't got an email yet. So.
You haven't got an email, so send me an email, and same for you. Send me one or 2, both of you. Send me an email, and I will. Because I'll forget, but I need to contact the bookstore and say, hey, how come all my people don't have? Or maybe both of you send me an email so I can name some names, okay? And I'll get you one, okay? What do you have written down? remain the same regardless of the number of units produced. So fixed cost remains the same regardless of the number of units produced. And so Columbia makes use of a sewing machine. Let's imagine that they make use of a sewing machine to make this shirt. And let's imagine that they're spending $100 a month renting this sewing machine. How much are they spending? Come on, focus, man. Focus. I mean, what's supposed to be in here? Isn't this monster? I mean, why are you spending good money on Monster if it's not helping you?
I don't know.
They're not cheap, are they?
I was hoping it was gonna wake me up.
They're not cheap, are they? Monsters? I mean, do you think they're cheap?
No.
Not as cheap as the water. No, yeah. And so, come on, man. You need to get your money back. Stella, how much are they paying for the sewing machine? Stella, go Stella. You don't know? I said it, didn't I? You were writing down other things? Carson?
Yeah.
How much? 100, no, dollars, $100, okay, thank you. So they're spending $100 on that sewing machine, okay? Renting it, you can imagine that, right? They're renting the sewing machine for $100 a month. Yes, ma'am?
So a product can have variable costs and fixed costs?
Absolutely, yeah, absolutely. The question was, can a product have both variable and fixed costs? Absolutely. So let's talk about this sewing machine. Emma's not, Emma here? Emma Taylor? No. Are you Emma as well?
No. But I
You have a question, please, please.
if they own the sewing machine, would that change how?
Not really, but it's easier. I use the word rent because it's easier for students to imagine. The math is a little different, but it winds up being the same. So, yeah, particularly for you all, I use the word rent because, I mean, there's something involved, depreciation involved, and you all aren't learning how to do depreciation expense, and all that kind of stuff. So rent just works better, but it works out the same. Because the thing is, yeah, we already own it. Yeah. And the point is, whether we make 1 or 100 shirts using that sewing machine, the cost of that sewing machine doesn't change. And so that makes it a fixed cost, okay? August, if we make 1 shirt using that sewing machine, how much are we going to spend on the sewing machine? $100. If we make 2 shirts, Jaron, with that sewing machine, how much are we going to spend on the sewing machine? $100. If we make 5 shirts, Veronica, using that sewing machine, how much are we going to spend on the sewing machine? $100. If we make 10 shirts, Maxton, on the sewing machine, how much are we going to spend on that sewing machine? $100. Joseph, are you ready for this? Okay, here's the hard question. The hard question is, if we make 0 shirts using that sewing machine, how much are we going to spend on that sewing machine? $100 is the correct answer. So can you feel the difference between a variable cost and a fixed cost? A variable cost, if we make 0 units, we incur $0. For a fixed cost, we still incur that money, okay? Now, it is important to recognize, and I talk about it here, because notice next to variable cost it says in total and per unit. Which one of those have we been talking about at this point in time? A total amount, a big amount, or a per shirt amount? Ian. Like, so far, have we talked about numbers that are in total or on a per unit basis? No, in total, actually. Because think about because the sewing machine, we were talking about $100 in total. And the question I was asking everybody was, remember, we were spending $4 per shirt, but the question I was asking everybody was, if we make 10 shirts, how much are we going to spend? What's the answer? 40, okay? So notice that is actually a total number. So that's a total number. And so please recognize that both definitions and what we've talked about so far is in total. costs in total. Variable costs vary in total. Fixed costs remain the same in total, okay? So now I'm going to take a moment and talk about per unit then, okay? I'm going to talk about per unit because how much were we spending for one shirt for cloth, Peyton? Peyton Dial. $4. So how much were we spending on the first shirt, Peyton? $4. Sarai, how much were we spending on just on the second shirt? Just the second shirt. $4. Grace, how about the fifth shirt? Just the fifth shirt. How much were we spending? Grace? $4. No, just for the fifth shirt, though. How much are we spending just for the fifth shirt? For the first shirt, we're spending $4. For the second shirt, we're spending $4. $4. How much for the fifth shirt? And just the fifth shirt? It would be $4. It'd be $4. And then, Nate, how much the 10th shirt? $4. You noticing a pattern? So, variable costs on a per unit basis are, and I have this in air quotes, fixed or constant. So variable costs on a per unit basis are fixed or constant, okay? And what'd you write down? For what I just said. What'd you write down? Costs, kind of air quotes, fixed on a per unit basis. You could write that down. It'd be really cool. Right? Is that what you got written down? Variable costs. Am I not talking loud enough? That's what students tell me, that variable costs are fixed on a per unit basis, or constant, fixed or constant on a per unit basis. Okay. Now, I mean, and I'll just say, good note taking is a skill, right? Did you have to do it much in high school? Take lots of notes, but did you write down much that the teacher did not write down on the board? Did you? You're used to, see, in here, you're gonna, if you haven't figured it out, and it'll help if you stay off your phone, that you're gonna write down more than what I write down on the board, right? You're gonna write down more than what I write down on the board, because I'm lazy that way. So, Nate, I just talked to you. You're Nate. I just talked to you. So what's the question? So the question is, describe variable costs on a per unit basis then. Connor? They're fixed on a per unit basis. Fixed or constant on a per unit basis, okay? So that is variable costs on a per unit basis. Let's talk about fixed costs on a per unit basis. Because how much were we spending, Ellen, on the sewing machine? $100. So if we make just one shirt using that sewing machine, what is the cost per shirt of just the sewing machine? You with me? So we've got that $100 we're spending. If we make just one shirt with that sewing machine, how much are we spending per shirt? Blake. Where's Blake Thompson? We're spending $100 on that sewing machine, and we make just one shirt using that sewing machine. What is the cost per shirt of the sewing machine? It is. It's $100 divided by what? $100 divided by 1 would be, cost per shirt is $100. You with me? Would it be helpful for me to write that on the board, the formula? Because cost per shirt, recognize this. Cost per shirt equals cost divided by number of shirts. Per describes division. So when I ask for cost per shirt, I'm actually describing the math with the words, right? Cost per shirt equals cost divided by the number of shirts, okay? And so if we make 2 shirts then, if we make 2 shirts, Skyla, how much is the cost per shirt? And Skyla is where? Skyla, go Skyla. I marked Skyla here. Is Skyla here, not here? Skyla Harden? Okay, I'll fix that. Who's next then? Gatlin. Is Gatlin here? Gatlin's here. What's the cost per shirt of 2 shirts? $50. $100 divided by 2. Okay. How about 5 shirts? Jackson. Huh? 100 divided by 5?
It would be
$20. How about 10 shirts? Danny. $10. Okay. So what is the pattern here then? What is the pattern here? Fixed costs on a per unit basis vary. And specifically they go down. Specifically they go down. Fixed costs on a per unit basis vary, and specifically they go down. And they don't go down in a straight line. It's actually a curved line, but you don't have to know that at this point in time. So far so good. Corey, what do you want to know? What do you want to know about variable and fixed costs? How are you feeling about variable and fixed costs? Good? Okay. So let's talk about, and very important, when making a product, it can have both. And probably does. Okay? So let's talk about product costs now. Product costs. Product costs are all costs associated with making a product. So what are you going to write down? Next page, product costs. What I just gave you a definition. What are you going to write down? Focus. What page are you on?
I do them here and then.
Oh, then you copy them in? Okay, that works. What do you got written down for me?
all costs associated with making.
All costs associated with making a product. Are you still waiting for a handy handbook?
Yes, sir.
You are, okay. So I've got at least 3 of you. Anybody, who's still waiting for a handy handbook? 4 or 5.
I'm pretty sure I just need to pick mine up.
But you've received no email? No email?
I did receive an email.
You did receive an email, so at least 4. Have one of you 2 send me an email though? And there are at least 4 people in here that have not received theirs. So hopefully I can get those to you within a week or so, okay? Very good, okay? Hermes, what do you got written down? What is a product cost?
All costs associated with making a product.
Very good. All costs associated with making a product. Let's put this on the board. Okay, product cost, period cost, all costs associated with making a product. Now, period cost has an awesome definition. Period cost has an awesome definition. It is all other costs. All other costs. So that means if it ain't a product cost, it's a period cost. Okay? If it ain't a product cost, it is a period cost. And we're going to see some we're going to talk about examples of these here momentarily on the next page, okay? But I want you to see, though, before we leave this page, though, there's a box on the bottom right-hand corner, right? There's a box on the bottom right-hand corner. Okay? VC stands for variable cost. FC stands for fixed cost. PROD stands for product cost. PER stands for period costs. So what I want you to see is that these definitions, these are actually super important concepts to understand. Just to understand the concept that some costs vary as you make more units and others costs do not is very important for decision making. And later on today, we're going to talk about examples here of these different types of costs. And it's important to recognize that any cost we name, cloth on a shirt, falls into one of these 4 boxes. So where do you think it would go, Cam? Cloth on this shirt, into which box would that go? That's exactly right. Under the variable product cost, right? Because it's a variable cost, we established that because the more shirts you make, the more money you spend on the cloth. And it is a product cost. Why? Because what's it used to make? Shirts. It's a cost of making a shirt, so it is a variable product cost. So the sewing machine, what does that then say? Into which box would the cost of the sewing machine go? First of all, your label should be outside, right? Label should be outside the box. You should have nothing written inside the box here. Label should go outside the box. Hayden, is Hayden here? Hayden, the cost of that sewing machine, where do you think that goes?
It would be fixed in product.
It's a fixed product cost, okay? So it's a cost of making the shirt, so it's a product cost. And it's a fixed cost because it doesn't change. If we make 100 shirts, we're still paying $100 a month for the sewing machine, okay? So any cost we name goes into one of those boxes, okay? Let's look at the next page. What is written on the next page for you? Just category, there's numbers 1, 2, 3, okay. Let's go over here. 1. Direct materials. 2. Direct labor. And 3. Manufacturing overhead. And so it should say on this page, right, that these are the 3 categories of product cost, is it not? 3 categories of product cost, and those 3 categories are direct materials, direct labor, and manufacturing overhead, okay?
What is that?
Say what?
What is that, manufacturing overhead?
Manufacturing overhead. We're going to talk about that. Yeah. I mean, you're not supposed to know. That's why I'm here. I'm going to tell you. You know what I mean? Hear what I'm saying? What? Did you know that you can associate memories with, although the chair's kind of in your way, isn't it? Forgive me. And I'm trying to be far away from you, although that just bounced.
You're trying to break the table or something?
No.
The chair?
No. You all know that you can associate sounds with something that you remember. You can. I'm going to tell you the story. Because you know what? Because I used to do this. The very first time I did this, I did it mostly to be ornery, right? Just to make sure that students were awake. Like I literally got students writing that down, and then I'd bang a chair on a table, wake everybody up. I get to see some heads snap back. It was kind of fun. For me, at least. And, but the thing is the second semester I did that, I went through, because what are we talking about now? The 3 categories of product cost. And that's what I want you to associate that sound with. The 3 categories of product cost. But the thing is the second semester I did that, I did the same routine, right? Put the notes on the board, slammed a chair, did my teaching thing. Those students left. And students from the prior semester came in. And they said, we heard the chair slam in our classroom, Dr. Fessler. We heard you. And we know what you taught today. We heard the chair slam. We know what you talked about. You talked about the 3 categories of product cost: direct materials, direct labor, and manufacturing overhead. And they were pretty excited. They remembered that. And so now I do it all the time. In different universities, in different classrooms, I do different things. A couple of universities ago, I would actually take a whole table and tip it and drop it on the floor. That one got me in trouble a little bit because there were offices underneath. Like I was on the 2nd floor, there were offices underneath, and apparently dust fell from the ceiling every time I dropped the chair or dropped the table on the floor. But I'm trying to teach you something. What am I trying to teach you? 3 categories of product cost. How many are there? 3. 1, 2, 3. And now the chair's up here. I can also conveniently use this chair as an example to help us define those costs as well. And that's what I'm going to do. So direct material is all the stuff you can see. Like the cloth or what do you see here, Hermes? Plastic. What else?
More plastic.
This is actually metal, I think. Metal. Some screw doodads. Yeah. What are you going to write down as a definition, Hermes?
Things you can see and touch.
Things you can see and touch. Things you can see and touch. Works for me. Direct materials. All the stuff you can see. Very good. Very good. Not super complicated, but it helps you understand what the concept is, right? So direct labor. So direct labor is people too. Direct labor is people too. So direct labor is all the people who touch the manufacturing process, right? So they're the people who worked on this chair during the manufacturing process. They're not people that worked on tables, not people who supervise. It's the people who touched this chair or ran a machine, that worked on this chair. So people who are actively involved in the production process of this chair are direct laborers. Okay? We're direct laborers. And then finally, drum roll please, manufacturing overhead. What in the world, Dr. Fessler, is manufacturing overhead, right? That was your question. Right? It's like, I never heard these words before. And manufacturing overhead, this is another one of those super cool definitions. All other product costs.
Managers.
We'll see some examples. All other product cost is manufacturing overhead. So basically, if it is a cost of making this chair, but it's not stuff you can see or people, it is a manufacturing overhead. And so that's going to be super important, right, to kind of, let's think of some of the materials and labor are pretty easy to imagine, right? We've already talked about plastic, metal, paint, color, whatever it is. That's all direct materials. People, we understand that concept. People who are making this chair, we can understand that concept pretty easily. But what else would be involved? What would be involved with making a chair that is not people or the stuff the chair is made out of? What do you think, Olivia? Say what? What's wrong? Well, we got this chair that we had made for us. And so we want to think about costs that associated with making the chair that are not the material it's made out of or the people who made it. No. I just want you to think about just an example of what activity would happen in a factory. What thing that might happen in a factory that would help make this chair that isn't the material and isn't people? Electricity. Used to do what? So electricity for the tools or machines that they used to make this chair. Great example. Yes, ma'am.
This is kind of off topic, but say like the machines that you use to make the chair broke, what would that cost?
Also a product cost. Yes.
What would it like? Which category?
That's a great question. Let me answer one question other first. So we've got electricity to run the machines. How about the cost of the machines? What would that be? Direct materials, direct labor, or manufacturing overhead?
Couldn't it fall into 2 and 3?
Huh?
Couldn't it fall under 2 and 3?
Is a machine a person? That answers that question, I think. Is a machine a person? No. So it's not 2. 2 is only people, humans. Beating hearts, blood flowing, kind of stuff.
No, it's touching
Correct. It's just people. Direct labor is just people. So the cost of the sewing machine to make a Columbia shirt, into which category does it fall? What do you think?
If I had to guess, I don't know, it's not like a direct material of the chair itself, but like it's putting it all together.
Correct. That's exactly correct. So you arrive at the answer manufacturing overhead by process of elimination, right? Is the sewing machine clearly a cost of making this shirt? Yes. Is a machine that bends pipe clearly a cost of that chair? Yes. Is it material? No. Is it a person? No. So it must be manufacturing overhead. And that's how you arrive at the right answer, actually, that thought process. And that's what I'm going to encourage you to do on your homework. Think about it like that. It's what I'm going to encourage you to do on practice exam and real exam, is think about all those things like that. We're going through process of elimination. Is it a cost of making the shirt? Yes or no? If yes, then it falls into one of those 3 categories, and we arrive at the right answer by process of elimination. Sir?
What about rent
On what?
on the warehouse where they are building that?
Okay.
Making that?
Rent on the building where the machines are hanging out. And the people. Where do you think it goes?
Last one.
Manufacturing overhead. And which box does it go in? It goes in one of the boxes. Which box does it go in? Let's show the boxes on the camera so everybody can see them. Everybody in our viewing audience. Yes, sir? Is it associated with making the product? Is that make it a product or period cost? Yes. So what part of your answer was wrong? Yeah, so it's a product cost. And then what was the other part of your answer? Yes, fixed cost. It's a product and a fixed cost. Okay, so the cost of the building that we use to make these, fixed product cost. The cost of the sewing machine or the machine we use to bend pipes, fixed product cost. Question?
The building would be a product cost? It would be a period cost?
What's the building used for?
Yeah, but you could make, you don't have to have a building, you can set them outside and make it.
True, if you could make them outside, but most things are not made outside. Most things are not made outside. Yeah. I had actually just in September, I had the fortune to tour a John Deere factory in Iowa. And John Deere, they make John Deere sprayers and what else? A couple of other things at this particular plant. And those vehicles live outside, but they're made inside. Okay, so it's stereotypically, most things are made inside. Most things are. But if they're made outside, then you don't have that cost. So we've talked about electricity. We've talked about cost of machines and building. You asked about, so what happens if we have to fix that machine? Which category does that go into? Is fixing a machine, making sure a machine's working so it can actually help us, is that a cost of the product? It would be, wouldn't it? And so is it direct materials? Is it direct labor? So what would it be? Manufacturing overhead. See, now you're getting the hang of this, aren't you? Yeah, so you can start to answer these questions yourself. But what do you need to know? You need to understand, what is this process, and is it involved in the manufacturing of this chair or this shirt or whatever it is we are making? If it's a cost, then it falls into one of those three categories. Okay? Anybody in here marketing major? Quite a few of you. Some marketing majors are going to become salespeople paid on commission. Might not be you, but some of you will, right? So a salesperson who is paid on commission Stella, where would that cost go? Were you a marketing major? Yeah. So this is perfect. Where would that cost go? In which box? In which box? The cost of a salesperson being paid on commission. Because do you know what that means? When I say you're paid on commission, when do you get paid? You get paid when you sell something. Is that variable or fixed? Variable, right? Because if you sell nothing, how much money do you make? Nothing. And then the other question to ask yourself is, do salespeople help make the chair? Okay? That you should now have enough information. Excuse me. You should now have enough information to know in which box do you put commissions of salespeople? Variable period. Exactly correct. Variable period. Because salespeople, they don't got a thing to do with making the product. They're there to sell it. But they're paid on commission. So it's a variable cost. Okay? Does that make sense? If they're paid a salary, what's a salary? Salary is a fixed amount every month, regardless of how many units they sell. Carson, where would that go? A fixed, Carson's here. Carson, where would that go?
That'd be fixed period.
Fixed period. Excuse me, fixed period, yes sir, fixed period. And then, anybody else? How are you feeling about these? These are important concepts, though. This is actually super important for you all to understand kind of the differences between these, okay? Let's go one more page and talk about prime costs and conversion costs, okay? One more page, and then we'll call it a day. So prime cost is direct materials plus direct labor. Prime cost is direct materials plus direct labor. You gonna write something down or just chit-chat? What do you need to write down, man? Thinking about it? Please do, please do. Prime costs are direct materials plus direct labor. Conversion costs are direct labor plus manufacturing overhead. Costs, direct labor plus manufacturing overhead are conversion costs. And so conversion costs are conceptually the cost to convert materials into a finished product. And then your question, please. There's just two equations. So the first one, prime costs are direct materials plus direct labor. And conversion costs are direct labor plus manufacturing overhead. Okay? And then the definition, kind of the word definition of conversion costs is the costs to convert direct materials into a finished product. Is the kind of word definition. Select a side. You are ordering, he's ordering food up here. My goodness, I'm apparently not very entertaining. And let's go back one page and clear up one thing and make sure this is super clear. Direct materials, is this variable or fixed? August. I don't talk loud enough, do I? Golly, I'm going to have to work on that. Direct materials, is it variable or fixed?
Variable.
It is variable. Okay, so direct materials is always a variable cost. You're going to write that down? Direct materials is always variable cost. Direct materials is always a variable cost. Direct labor is always a variable cost. Direct labor in books are paid an hourly wage. Okay, in books, for purposes of our exam, direct laborers are paid an hourly wage and are therefore considered a variable cost. So direct materials and direct labor are both variable. And then finally, let's talk about manufacturing overhead. Is manufacturing overhead fixed or variable? And the answer is yes. We had examples of both. And so here we had a great example of electricity for the machines, right? Thank you for that. Thank you for the example of electricity for machines. That is a variable manufacturing overhead, right? If we don't turn on the machines, how much electricity do we use? Nothing. Nothing. So electricity is an example of a variable manufacturing overhead. It does turn out in real life most manufacturing overheads costs are fixed, but we can come up with examples of both. Yes, sir.
So it is both?
It's both. It's both. But each individual cost is not both, but there are examples of both that fall into the category of manufacturing overhead, right? So there's no cost that's both variable and fixed, but can be a little bit of one or a little bit more of the other. Okay? Questions, comments, concerns, random thoughts? Piece of cake, walk in the park, easy as falling off a log. You get a question?
What did you say cost was?
Direct materials plus direct labor.
You said like a definition.
No, conversion costs, I gave you a definition, which is the cost to convert direct materials into a finished product.
Thank you.
You're welcome. Okie doke, are we good? Okay. Hang out for just a second, everybody.